Hi everyone. Good news for people who like value investing, and value investing and value style seems to be making a quite a splash and quite a comeback over last 1.5 years. And the trend of value outperforming growth seems to be getting stronger, and this is typical of any cycle. It starts with patches of few months of outperformance when a style starts to improve, and it is getting stronger. So value clearly is the favor, and it's performing really good. The background, if you look at it, why value is doing well, is clearly the cost of capital is going up. When interest rates rise, the cost of money is higher, and people will not buy anything at any price. Right? Any quality, any stock has to justify its price, and when the justification comes into the decision making, value tends to do well, and that is exactly what is happening. That's the first point. Second point is when equity returns are driven by more of earnings upgrade and earnings cycle, and broad-based growth, value tends to do well, and that is the case what is happening across the globe and in India, where the global growth is picking up, and that is resulting in corporate earning upgrades happening after quite a few times, and quite broad based, not specific to a certain sector, a tech sector or like that, but across the board. So some of these factors are helping value style do better. Now, $1 million question over here in investors' mind is whether it will continue. Now, the answer lies in history. The previous big cycle of when value did better than growth was 2000, 2001. It started in 2000, 2001 and lasted till 2010. So it's a 10-year cycle. Again, when growth started doing better in 2000, from 2010-11 till 2019-20, again, it was a 10-year cycle. Right. Similarly, from 2020-21, broadly, value has again started to outperform. And we believe these are longer cycles, 7-8 year cycle, and we are just 1.5, 2 years into the cycle. Because interest rates still are firming up, economic activity is still improving, it's nowhere near the peak, and the liquidity will continue to dry up across the world, and inflation is making a strong comeback, and it's not going anywhere. So all these things makes us believe that this trend will continue and get stronger. So value, I think, will continue to do better. So investors need to be careful about calling it quits very, very quickly, because, and we clearly understand, because investors have kind of been patiently holding value style funds in their portfolio between 2016 to 2019, when value did extremely, it was an extremely bad situation for value funds. And because now they feel that the NAV has started to move up and the performance come back, they fear that it might slip again, and so better to encash some profits, or kind of move out of value products. I think this would be a little more myopic. Investors need to take a longer term view. As I told, these are longer cycles. The recouping of whatever value funds lost in terms of underperformance is coming back, and it will continue. And as I said, it will get stronger, and the outperformance against growth will stronger against the backdrop of the macroeconomy and the interest rates that what we are seeing. So investors need to hold their horses. We would strongly, on the contrary, suggest instead of selling, you need to relook at adding at dips this style. The style will continue to do much better from here on. Coming to our fund, Quantum Long-Term Equity Value Fund, which again suffered between 2016 to 2019, is again making a very strong comeback, and our portfolio is attuned to sectors like financials and autos, which are cyclical sectors. They do well when the economic activity improves. A large weight is in IT, which again is a global cyclical, which is again doing much, much better. So earning upgrades in these sectors are very, very highly likely, and the valuations are comforting. It's a very strong combination where you have comfortable valuations and a potential of earning upgrade. And we see the fund also doing very, very well, continue to do well. It's already seeing traction. Even post 2020 in patches, the performance has improved, but it is getting stronger. These patches will become trends, and trends will become long track records of outperformance. So we believe people who have invested in Quantum Long-Term Equity Value Fund, or for that matter, any other pure value fund need to stick on. They have patiently waited. I think it's the time to recoup whatever underperformance has been by the value funds, and enjoy the gains of that patience that everyone has kept on value funds. So this is not the time to call it quits on value and believing that this is the top and we should exit and move to again growth or some other kind of strategies. I think value is making a strong comeback, and it's in for some a lot more time. These are, as I told in my initial comments, it's a 7, 8, 10-year cycle, and we are just 2.5 years into the cycle. So a long way to go to recoup the performance. So the only point that I'm trying to summarize over here in this short video is that this is not the time to call it quits and believing that this is again a top for value and moving out of value. This is actually the bottom, and there is a long way forward for value style to outperform. As in my initial comments, I've said that these are longer term trends. These cycles are just firming up, and the outperformance of value will continue. So, specifically for quantum long-term equity value as well, we believe there is a lot of opportunity to recoup of whatever underperformance we had between 2017 to 2019. That journey has just started. So it will be too early to move out of value and move to any other style. It's time to kind of reap the benefits of patience that you have kept on the value style and quantum long-term equity value. So continue to hold and recoup whatever you believe that there was an underperformance, and then enjoy the gains of that patience. So happy investing to everyone, and stick on to value. The time for value has just begun. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.